Yeah, in my view, India is the kind of market which wherever and whenever we have seen turmoil across the world, and particularly within emerging markets, and you can go back from the 97, 98 era when the Asian crisis happened. Generally speaking, India holds out quite well in times of crisis. And that's primarily because it's not a simply banks, financials, and property and commodity driven market, which is typically what most emerging markets are comprised of. So India actually has a very well balanced market, and which is why it is more resilient in times of crisis. So hence, any time of crisis across emerging markets presents extraordinary buying opportunities in the Indian market. And I think we are at one right now. Many things I liked, a month or 2 months back is, they are down like 20% or 30%. And, there is a finite point at which, stocks can go down to. They can't go down to 0%, right? I mean, so, there will always be like a band wherein 30 to 40% down is as good a price of entry as you could ever find. And it has happened, it's happened very quickly. I don't think the world is out of the woods, let me make it very clear. But I do think India, within the context of a very troubled global macro situation, offers relatively a good safe haven. I mean, other than India, I can only think of US Treasuries as being the other safe haven. Otherwise, I think India is probably the best balanced market, amongst most of it, the peer group markets. And I think this is a good time to dip your toes into the market, even if you don't want to go all the way in. I think a 25-30% incremental exposure is very, very warranted. So my take is, good time to get in, definitely, for sure.
So if you Google Shankar's recent comments, you'll probably find a comment which says that India is in a bear market. I don't think that is what Shankar tried to convey in that interaction.
No, that was a classical media misquote, actually. And by CNBC. I think it's deliberate because, these headlines like these that kind of, catch the fancy of people. But what I said was a different thing. And my point was that the US, which has been touted as a big bull market, is actually, if you look at it from the last 16 years, is more or less a flat market. I mean, the S&P was about 1600 in 1999. It's about 1900 now. 16 years hence, all you've got is barely 20% absolute return, which compounds to maybe 1.5%. I mean, US Treasuries have done far better than that. So, which I was only trying to underline my basic premise that I do not believe that markets are forever, that markets should never be sold, they should always be bought. I do not believe in that. If you timed markets broadly, you were okay, even in a market like the US. Otherwise, point to point, you were looking at virtually no returns. So that was a central point I was trying to make.
Okay, thanks. Now, Nilesh, just to clear the air, did you actually write that open letter to Jim Rogers?
Yes.
Okay, you did. So, it was a really nice letter to read, by the way, Nilesh. And, if I just take a couple of cues out of that, I believe you were and you continue to remain an India bull.
Before that, let me add this, that I was on a panel with Jim Rogers, a few years back, and what he wrote, I actually spoke. So, I think, very politely, I think he talks utter nonsense, and I said it in so many words. So when I read Nilesh's thing, I think I sent him a WhatsApp saying that, thank you for, reiterating what my view about this gentleman has been.
Shankar, next time you do that, it will make for great TV. Do alert us in advance.
Yeah, I know.
but Nilesh, yeah. So you have been an India bull. It's shown in the way your schemes, whether buy side, sell side, has performed, and I believe you continue to remain one.
Yes, except that I don't work in India bull. In my introduction, a lot of companies where I have not worked. I'm probably going to work in future. I've been added to one. So either it's a mixture of LinkedIn or Google, but that's what media does.
You're blaming us for wrong reasons.
I'm using social media. You're taking it from So let's just go back 14 years. Exactly on today, Indian markets were down 22%. It fell from roughly about 3,450 to by 750 points. It happened because there was a terrorist attack exactly 14 years and 1 day before in New York, most of the Indian investors thought New York is part of suburban Mumbai. You don't believe that? You should have seen the market then. All over the world, interest rates had crashed. In India, interest rates went up because investors thought, now we are next on the target. And there was panic all over. Everyone thought this is the end of the world, end of India for sure. And that's where we lost 22% of our market in 1 day. American markets were closed on the next day, but our markets were open, and we continued our tendency of Begani Sadi mein Abdullah Diwana. I don't know how many of you are aware, but when John F. Kennedy died, America didn't declare a holiday, but Indians declared. So that tradition of Begani Sadi mein Abdullah Diwana we have continued. We celebrate their terrorist attack more in our market than their market. But look at what had happened. Every imaginable risk which can come in the future have already happened in the last 14 years. We have seen drought, we have seen natural calamities, we have seen government falling, we have seen government getting formed, we have seen left of the government, center of the government, right of the government, we have seen crisis, we have seen recession, we have seen currencies falling apart, we have seen commodities falling apart, we have seen China falling apart. All kinds of things have happened. In the last 14 years, our markets are just 10 times. It's far better than gold, it's far better than fixed deposits, it's far better than debentures, it's also far better than Sarada schemes and so on and so forth. So if you can take advantage of crisis, you will get a winner. And you are not lucky in this generation to get a crisis of 9/11. So be happy with Chinese people, or China government, or Chinese market. They are bringing correction in our market. It's for your advantage. Grab it. Who knows tomorrow that opportunity will be there or not. And 14 years down the line, if all of us are invited back on this panel, you'll be happy that you followed our advice.
I'm sure they will be. Okay, in the room upstairs, I got a brief view about how, when Anup told me that whenever he and Nandan talk, that time started loggerheads with their ideas as well. So it'll be interesting. But Nandan, let me start off with you. Amongst other things, you do believe that while the India story is on the mend or will correct, there are a few things that the government needs to do as well. Would you want to comment on that?
So hello, can you hear me? What I'd like to start off is a statement from a book that I'm not advising that you read. It's In Spite of the Gods by Edward Luce. The book is not anything great, it's written for foreigners, but there's a line there which is excellent. The line says basically, India is not on autopilot to greatness, but it would take an incompetent pilot to crash it. It's an excellent line because it really epitomizes what is India. And what is the reason for this? There's a groundswell of demographics which is counterbalanced by venting. So you can vent here in social media, through democracy or whatever. So you don't have a Tiananmen Square, you don't have an Arab uprising, you don't have too many buses burning, etc., etc. So this is a system which is stable, and this is the reason why my people who spoke before me said that you should buy when times are bad. You can't do that in Brazil, you can't do that in China, you can't do that in Russia, because it may actually crash. In a country like India, it's very important to believe that there are counter mechanisms, therefore when it is cheap, that you are not going to crash and therefore you can buy. This is a very important distinction between India and other places. Also to talk about something else which is related is, you go to any other country, you go to the Arab world and they have their social unrest and demographic problems. You go to the US and you have problems that are not even solvable. You talk to any Indian, and they'll tell you at least 20 things that we can do immediately. That's the potential of India that actually ties in with the thesis why you can buy when it is cheap. So, there are a lot of misperceptions that we see currently. For example, people talk about the fact that when times are bad globally, that's the time to invest in India because our costs are low. Oil prices come down, interest rates are low and so on. That is the first misperception. First of all, India does well when the world does well. And the reason for that is because we do well when our confidence increases and capital flows come in. So this is in the nature of economics. I'll leave you to understand it more. But do not make the mistake to think that you do well when the world does badly because your import costs are low, or costs of whatever inputs are low. Because your margins increase, your volumes don't increase. So that's one misperception I want to clear. Second misperception that I want to clear is everybody's talking about Fed hiking rates and therefore India will go, emerging markets will go to the dogs. Secondly, what's most important is Fed is not going to increase rates unless the US is sustainably doing well, which ties up to my first thesis. Thirdly, is what we are talking about is the US dollar suddenly appreciating and therefore India going for a toss. Question is, there are moves afoot by both China as well as Russia to see that the US dollar may not remain as the standard of global currency. So think about it, and it's not necessarily written in stone that the US dollar will appreciate. Finally, people talk about how monsoons are not important to India because non-agri growth and so on and so forth. Well, monsoons are important. They may not be as important in 2 years in a row. You've had good this thing, but they are important because your non-agri income in rural India is also related to economic growth in urban and also related to agri.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.